My next guest says we're going to have to be very patient if we want to see China play fair on trade. To Moody's chief economist, Mark Zandi. Mark, good to see you. I'm going to read from your December 4th note in which just a couple of days after this woman was arrested, but of course we didn't know it at the time. We didn't know it until the day before yesterday. You say if President Trump follows the script we expect, no further escalation in the trade war and a deal with the Chinese sometime mid-next year, then our outlook for the U.S. economy will not change appreciably. Well, of course, President Trump very rarely sticks to script, let alone somebody else's. So, I mean, none of us saw this coming, the arrest of this woman. How does that change calculations vis-a-vis a trade deal?
Well, it certainly complicates things, probably delays the day when we actually get some kind of arrangement. But at the end of the day, I think if the president continues to pursue his policies, it's going to continue to undermine the stock market and ultimately the broader economy. So he'll stop. He'll figure out a way to get a face-saving arrangement and move on. So this certainly complicates things, delays things, makes it messier. But at the end of the day, I think we end up in the same place.
Wow. I would venture to say you're being a lot more optimistic about this than the markets are.
Oh. Well, the markets are reasonably nervous about this. I mean, they have a lot to worry about, a lot of uncertainty. We're starting to hear from more and more CEOs of companies that this is really starting to do some damage. Certainly, they have paused in their investment. They're not investing. If you look at the investment data, it's weak over the last several months, and I think that's in large part because of this trade war. So, the stock investors have a lot of grievances. This trade war is at the top of the list, and until they get some certainty around it, I don't think the stock market goes anywhere.
What about the costs, specifically the costs? We've been seeing more dribble out about what it is costing U.S. businesses as a result of supply chains being cut and direct tariffs, et cetera. How bad are those costs being felt by American business now?
Well, it's starting to show up in the data, believe it or not. I mean, I mentioned the investment data. I mean, investment got a nice boost earlier in the year because of the stimulus from the tax cut, the cut in the corporate tax rate. But it's basically gone flat now for the last 3, 4, 5 months, and really punk. And actually, we run a survey off of one of our websites of businesses. We've been doing it weekly since 2003. We asked a question about investment intentions, and it was very, very strong, solid from 2013 all the way up until the mid part of this year, and now it's taken a dive, and I think the trade war is the culprit here. So it's starting to do some damage. And here's the other thing. I think it's one thing if the president imposes tariffs of 10%. I think businesses figure out a way to manage around that, find other sources for what they're buying, pass some of it through to their customers and eat some of it. But if it goes to 25%, I think that's a really big deal, because then that will change global supply chains, and that will be highly disruptive. So if he goes to 25%, I think the damage will be much more significant.
On business investment, we were so optimistic about it, particularly in terms of hiring people. They really went out on the limb and hired millions of people, U.S. businesses did, as a result of the tax and regulatory changes. I'm just wondering if it's flattening that business investment to the point where you could foresee the possibility of a recession.
Well, I think if the trade war escalates, I mean, if, in fact, we don't get a deal, some kind of arrangement early next year, if, in fact, President Xi and President Trump can't get it together, and we do go to a 25% tariff on all Chinese imports, then recession risks are going to be awfully high, awfully high.
Mark, I got to ask you something that's just breaking through the wires. We've been hearing from different Fed officials. Some people wonder whether that's wise to hear from them so often. But Mr. Bullard, Fed official, says the Fed could consider delaying the December rate increase because of a narrowed yield curve and delaying it until January. What do you think of that?
I'd be surprised. I'd be shocked. I mean, even today's jobs number was on the soft side, but at 155,000, that's well above the growth in the labor force. Unemployment will continue to decline, and it's very low. Wage growth is accelerating, so I think the Fed has some work to do. I'd be very, very surprised if they delay next week when they meet.
Why do you think Mr. Bullard is saying that in public? It's kind of dramatic.
Well, he's got his opinion, and all various Fed presidents and other folks on the FOMC have a view, and it's not a monolithic view, so it's fair for him to express, and it's healthy. It's healthy. I mean, they should have a debate because no one really knows how this is going to all play out. So, I think it's fair.
All right. Well, I'm very happy to hear about your optimism about a trade deal. I hope it does come to pass sooner rather than later. Mark Zandi, great to see you, Mark. Thank you very much for being here. Appreciate it.
Thank you.